I'm going to talk about this Rutgers cost accounting spreadsheet that we developed so that you can look at the winners and losers in terms of the enterprises that you're producing on your farm. One of the most popular items requested for extension farm management folks like myself are enterprise budgets. But even though we can give you sort of a typical enterprise budgets, everybody's costs are different and they vary from producer to producer based on the size of your greenhouse or your farm or your ranch, where you're located, your managerial practices, the time of year that you're producing. I'm primarily focusing on greenhouses. So in the Northeast, where Rutgers is located, it's obviously more costly to heat a greenhouse in the winter than in the spring or fall. So time of year matters. Volume of production, you all heard of economies of scale, that impacts things. Availability and cost of labor, which is a big issue at the moment. The product mix, what you're growing, which market channel you're in. Are you in the wholesale or retail market? Do you sell directly to consumers? Are you part of a CSA? All those things matter. And it also affects how you produce and the quality and size of the plants and products that you produce, and the type of heating system. And that's all of a sudden become another big issue as well. Heating becoming a big issue in greenhouses seems to come around every so many years. And for a while we were doing fine, but now, as you know, energy is going up. So that makes it time to look at some of our costs as well. So financial management, which you're focusing on, is critical to success of your farm business. You need it for budgeting, for managing cash flow, for controlling credit, for knowing how much things cost so that you can determine the price and if you're making any profit based on what you can sell it for and what it cost you. Obtaining capital, being profitable, and doing some what-if planning. And I'll show you how to do that later on. So the bottom line I'm trying to focus on here is that your costs are different from everybody else's. So you need to calculate your own cost. You can start with some baseline numbers, which I'm going to provide you today, but you need to look at your own, and hopefully you can find some winning things that you have in your business that will help you succeed, something that you could do a little bit better, cheaper, smarter than the competition. One of the things I always like to emphasize when we get started is that you have returns to several different, from several different inputs. You have returns from your investment in the farm in terms of the money that you put in it. So that would be similar to interest. You also do work on the farm and you manage the farm. So that would be your own salary. And you also are taking a risk by being an owner of the business, and that's profit. And the reason I mention these is because most farmers are in a family business. They're not C corporations. So they don't tend to pay themselves a salary. They don't tend to give themselves credit for the money that they're putting in the business. So when they talk about profit, they have some other things sort of intermingled. So I'm suggesting that you pay yourself a salary when you do your managerial accounting, so that when you're talking about profit, it's truly just return to taking the risk, not the labor that you put in there. I got into doing cost accounting several years ago when I was asked to do this as an extension talk. And so I thought, what do growers already have that can make this easy for them? Because we can get into a very complicated cost accounting enterprise budget type way of doing things. But if you make it so complicated that it takes so much time and takes a lot of data, then nobody's going to do it. So I try to follow the KISS principle, keep it simple, stupid. So I thought, what does everybody have? Well, every grower that I've ever visited has an income statement and a balance sheet that their tax accountant gives them. And if you don't have that, you do have an income tax return that you have done yourself. And if it's a farm, it's a Schedule F. A few might have a Schedule C if they're incorporated. Most farmers also know the production data. They know how many acres or square feet of greenhouses they have. They know what crops they're producing. It's actually quite complicated, and how they do this is amazing to me because a lot of it's done in your head. But the production data of how much does a pot cost, how much is a bag of fertilizer, most producers know that off the top of their head. You can do this with a pencil and paper, but I tend to be partial to Excel spreadsheets. So I came up with this Excel spreadsheet to try to take the information that you already have and then try to allocate it to the different enterprises that you have. And then you need to have a desire to determine what are the most profitable enterprises. And I think people are more willing to do this now than like 40 something years ago when I started working with agricultural economics. The greenhouse industry anyway has gone in my professional lifetime from being a growth industry to being a very competitive, mature market. So you can't just do whatever you want now and expect to make a profit like you could back when I was in graduate school at North Carolina State. And I think back then people could pretty much ignore this, even if they had one or two crops that weren't making money. They were making enough on the others that they could ignore them, and they didn't want to learn that their favorite crop might be the one that wasn't making money. So that's harder to do now. You need to really focus on your cost. So a few years ago, after developing this spreadsheet, I thought, well, I'll just put this online and make it easy for everybody. And I quickly found out that wasn't quite so simple. So what we did come up with is this interactive crop budget that is on our, if you Google Rutgers Farm Management, you can find it there. Otherwise, the complete link is at the top of this. But we found that it was quite complicated to do the programming online. So we came up with this simple spreadsheet that is there for free, but it only allows you to do 5 crops. Whereas if you buy the cost accounting program from Rutgers, you can do many, many more crops. And we do sell the cost accounting Excel version of the spreadsheet for $99. But I was just talking to Doris, if you're in the Annie's Project workshop, you will have that as one of the tools of the workshop. If you're not, and you're listening today, I will discount this for $75 for you. So just email me and let me know at the end of the talk if you would like to do that. So what I'm going to talk to you about today then is the spreadsheet that's using Excel. And I keep adding bells and whistles to it. As I said, it started out as an extension talk, and quickly people said, I'll make this available. And I found it very easy to throw some numbers together in an Excel spreadsheet, but then to do the work that makes it user-friendly for other people was more of a task. So the reason we charge is I keep having students work with me and sometimes even programmers to update it and make it more useful. So you see there's different tabs that you can go to now to enter the information. So that is what it looks like when you open it up. And then the first thing we start out with is entering your information from your income statement. And we've also added a balance sheet. So just to do the enterprise budgets, we would just need the income statement. But we've sort of responded to consumer demand and added the balance sheet and a cash flow statement so that you have all of the financial statements you need in one place that are easy for you to look at. So this is the first tab that you can see there where you add information that you have on your income statement. And also we started out just doing greenhouse crops, but let's see, that is working. I'm trying to use the pointer, but I'm not adept at it. But we have greenhouse crops, and then a lot of greenhouse producers, as the market became more competitive, have added outdoor crops. So we've added a column for those too, because the way we determine the overhead cost, spreading it over multiple crops in the greenhouse, is cost per square foot. But when you're outdoors, you don't have to get that picky. So we look at cost per acre. So if you don't have greenhouse crops, you can just enter in this outdoor column. And if you have only greenhouse crops, you can enter there, but the program will total up for you. And then on the far right-hand side, you see a percentage of sales. So we calculate all the costs based on the percentage of sales. So you input your information from your income tax return or income statement, and the program will then calculate each of your expense categories on a percentage of sales. And there are some options where you can add other categories that we might not have included here.
So Robin, for instance, if you're a livestock producer and you want to use this, you could use this as well. You would just put your livestock expenses under the outdoor crops column then?
Right. And that's a good point, Doris. Thanks. And anybody else, please interrupt and ask questions. And you can also overwrite, I'm thinking it's a spreadsheet and it's not, but you can also override my categories here. And so instead of seeds, you could put calves or something, and then you could put outdoors. So then you would be looking at acres instead of square feet. So I think with just a little adjustment, you could make it useful for yourself. And you can also create your own spreadsheet, starting from scratch. But I've put a lot of work into thinking of the things that a farmer would need. So I think it might be a good starting point is to, if you had some other enterprises, just put them in here. If it's greenhouses, use the greenhouse one. If it's anything else, use the outdoor ones. But that's a very good point. So to be able to do the ratios and just to sort of keep all your records in one place, we have added the balance sheet, and I'll go over that a little bit in the future. And you can also override the categories that are here. And you see there's a lot of others where you can put in what you actually have. And the example I have here is actually a survey I did of mostly New Jersey, but some Pennsylvania greenhouses. And I found, amazingly enough, over time, that the percentage of cost as a percentage of sales don't change that much. So that's why I do those calculations. So, and we also talk about benchmarking in our workshop. And because most greenhouses are not a C corporation, they don't have to publicly report their financial statements. So it's hard to find this information. Years ago, Michigan State put out a report of growers that were willing to cooperate and be part of an average, but it's hard to find average information. So you can do your own benchmarking by adding things. It seems like somebody put something in this chat. Okay. Emily, yes, crops and cattle. You could use the spreadsheet in that outdoor category. So
she was wondering if you could have separate outdoor columns. Could you have a column? Could you adjust the spreadsheet such that you have a column, one for livestock and one for crops?
You could probably just change the greenhouse to livestock, and then instead of looking at, I keep trying to click on it thinking I'm clicking on the spreadsheet, sorry. So you could change the labeling, I think, and use it that way. You can do, instead of having greenhouses, just maybe make that livestock and change the square foot to acreage.
Okay.
You could certainly juggle it around, I think, to make it work for you. Like I said, we keep adding all these extra features and making it quite complicated from what it was before, but also trying to make it user-friendly. And we've switched to these tabs below that you see where they're all connected to each other, and it knows where to pull the information from.
Okay, thank you.
So you're welcome. So one of the things we wanted to do is also add ratios. And I always think of this, because I'm an extension educator, more of a tool for educating. So what I did when I added the ratio component of the spreadsheet is I looked all across the country at other land grant universities, and looked at their financial recommendations. And there's several good ones that have different ratios that they think are important. And I sort of picked the top 17 here and divided them into the 4 categories of profitability, financial efficiency, liquidity, and solvency. And I put divide them into those columns, put at the top sort of a quick little definition of what each of them are. And then once you put your income statement and balance sheet, the program will calculate your figure here. Then the next column from all those publications across the country is what was recommended from most land-grant universities. So the range that you should shoot for. And then the next column is the sort of the formula in words of how it's calculated. And then the final column is what does that mean in real terms to you? So that's a little quick reference sheet. And then if you get this cost accounting program and you do it every year, you can look from one year to the other. Is my gross margin changing? Is my net income changing? Am I doing better on liquidity? So it lets you benchmark yourself. So just a little quick review of what an income statement is, so we can pull that into the information here. It's a profit and loss statement. We also hear it referred to as a P&L statement, an operating statement, a statement of earnings. So it's usually done over a year. It's done over a time period, and it summarizes the earnings and expenses of your business for that period of time. So the simplest way we can do an income statement is we look at our sales, and then we subtract our direct costs, our overhead cost, and then the bottom line, we call it, or profit or loss, is what we have left. So that's the simplest form of an income statement. And it's very important for measuring profitability for things like return on assets and return on equity, and financial efficiency, or your operating expense ratio. So going back to our Rutgers cost accounting spreadsheet, we take our information from income statement, and I've simplified it here and just put the total column for all your direct costs. And once we put them in and we put our sales in, and the average for the greenhouses I was surveying was 2.2 million, it calculates everything on a percentage of sales. And this is one thing I've seen change a little bit over the years, is because as the greenhouse business, and I'm sure other ag businesses as well, become more competitive, there is a lot of overhead infrastructure invested in a greenhouse, and obviously in a lot of other farm enterprises as well, your facilities and very expensive equipment and so forth. So what growers are trying to do then is get the most out of the greenhouse as possible. So they try to, instead of having one crop per year, try to do 2 or 3 or more. And so the cost of their direct inputs have been going up as they try to produce more flats of bedding plants, for example. The typical greenhouse, I think, started out bedding plants for the bread and butter. So they filled it with bedding plants, sold those in the spring, and then they thought, what do I do with this greenhouse the rest of the year? So often they grow poinsettias for Christmas. And the problem eventually we ran into is not, people don't want to buy as many poinsettias as they do bedding plants. So there tended to be a glut in the market, and the price of poinsettias went down. So that's made it difficult then for profitability. And it also is one reason we need to look at all the different enterprises individually to see which ones are making money and which aren't. So that's your direct costs. Then we have labor, and often this is family labor or mainly the owner, but I again suggest you pay yourself a salary here. And then labor is usually the most expensive cost, or tied with supplies. You see the average is roughly 1/3 of the sales is going into labor. A little bit more than 1/3 if you add the overhead, a little bit less if you only look at the general labor. Then utilities, I guess, should really be a variable cost, but it's difficult to spread it out over each crop. And this cost accounting program might give you that option, that you can, if you can tease it out for each crop, you can. And our ag engineers come up with these very complicated formulas and programs to help you do that. So if you want to go down that route, you're certainly welcome to, but I've just left it pretty much as an overhead cost. And again, we try to allocate our overhead costs for greenhouses on a per square foot per week basis. That space becomes very valuable. So that's what we're trying to get at, is how can we tease this out into each crop and allocate as many crop costs as possible to an individual crop. But if we can't, we leave it as overhead, and then that has to all go to one crop or another. So it gets allocated on a per square foot per week basis. So these are your overhead costs, depreciation being the biggest one, mainly the greenhouse facility itself, of about 15%. And then, as I said, we're going to look at a per square foot per week basis, but so we need to put in how many square feet we have, and we're looking at an average of 138,759, and this just happened to be the average of the greenhouses that I surveyed, so about 3 acres. And it does take a lot of inputs to create income. So we have sales of about 2.2 million, but we have 2 million in expenses, leaving us net returns after subtracting out the owner's salary about $211,000, or about 9.5% profit. So the profit margin is the profit per dollar of sales after you pay the owner's salary, and we added an opportunity cost of interest invested in the business here. So it really would be pure profit. And a lot of people look at that number and say, that's not enough. So then you can start looking at, how do I improve my business? What are the problems? What, if I don't have this high a profit margin as I'd like, what should I start looking for? Well, you can start looking at your pricing system. I was just at the fruit and vegetable conference in Pennsylvania, and there was a discussion there about, should we raise our prices? And somebody mentioned, you go to the dollar store now, and a dollar pair of reading glasses is now $1.25. So that's a 25% increase. And farmers are always very hesitant to raise our price. In the Northeast, we have a lot of direct marketing. So, will the customers accept a higher price? Some reasons that profit margin may not be where you like it to be is your costs have probably been going up, but you haven't raised the prices. There's a lot of overhead relative to the size of the farm. That gets into trying to spread that overhead cost over more units of production. Very similarly, not enough sales for the resources allocated, very high overhead cost, wasteful spending on inputs. I've seen, we can try to mechanize, but I've seen a lot of people in the past, buy potting machines that didn't work out, and so they're been discarded. So make sure you're investing on things that are going to bring money back to the farm. And poor production, if you have, again, over my lifetime, there have been infestations of various diseases and insects, and it seems like almost every month we hear some exotic disease or insect that's attacking things and hasn't been solved. So I remember back when gypsy moths were a big thing, and now we've changed the name of them to, I forgot what the new name is, but gypsy moth's not politically correct anymore, but we have the stink bugs and all kinds of things coming in that we didn't have even a few years ago. So if you look at the problem being cost, and costs are too high, what are the highest costs? A lot of that right now is labor, and labor is not only expensive, but hard to find. Can you control it? This is a picture of a robot I took just a couple of weeks ago on a tour of some greenhouses and nurseries in Miami. And because of the pandemic and because of it being difficult to get labor, expensive to get labor, they bought this robot to transplant their little cuttings into flats. And they still have humans doing lots of things because you have to have a big enough volume of production to make this work. But this was at Pure Beauty Farm in Miami. They feel like it's cost effective now to start adding some robots. So they are being proactive in controlling costs that they can. Another question you can ask are these costs necessary? Could I do it a different way? And if I mechanized, would it reduce my cost? If you think the costs are too high, are we over mechanized? Again, mechanization only works if it's efficient. If you have a lot of different crops and you can't really mechanize and you're always switching, then it may not be worth it to mechanize. Can you be more efficient with your labor? Do you have too much labor? This is why I think we started seeing greenhouses go to outdoor production. They have this big bulk of production in the spring. They hire labor for it. If you want to keep your labor supply all year round, you need something for them to do the rest of the year. The same thing with your customers. You want the customers coming all year. So we've seen greenhouses horizontally integrate into outdoor flower production, pumpkin production in the fall, Christmas trees, and so forth, so that they can use that labor all year round. Then finding the right kind of labor. As I mentioned, when we were at Pure Beauty, all of a sudden we saw these H2A workers coming in with their suitcases because that's who they can find now to do the work in the greenhouse. And how do you deal with labor in slack periods? I remember way back when I started in graduate school, most people that were working in the greenhouses in the spring, believe it or not, was a term we don't hear anymore, housewives. They would take these jobs in the spring to save money to go on summer vacation. They don't, now women are mostly in the workforce full time, so you don't have that source anymore. So now a lot of people have gone to H2A labor. And the biggest problem is this last one of shortage of labor in the peak periods, which is pretty much become all year now. So when you're talking about a 90% of your sales are in cost, leaving you maybe at a 9 or 10% or even less profit margin, cost control becomes very important, because if you can save, if you have a 10% profit margin, and you save $1 in cost, you get to put that in your pocket. So if you sell another dollar's worth of plants, you only get to put 10 cents in your pocket. So cost control becomes really critical. Okay, so that takes us through the income statement on the greenhouse cost accounting program. But like I said, we have a very expensive greenhouse. It's kind of like a plant factory. And we want to account for all the space that we're using. So we're looking at the total square feet of being 138,759. And then another question you have to answer, are you using that space all year round? So another question that gets put into this calculation is, what percentage is really used for production? Even if you have it full of plants all the time, you've got aisles and walkways and things like that. And yes, you can fill them up to some extent with hanging baskets. So we need a realistic guesstimate here of the percentage we're using. So we're saying 75%. And also, how many weeks are we in operation? If we're not using that production area all year, we could be undercharging the overhead costs to each enterprise and making things look more profitable than they are. So we take these two factors into consideration. We do the same thing for the outdoor production. We say we have 5.5 acres, but we're only using 8% of that, 18% of that, and we're only growing these crops 15 weeks of the year. So these are, I've made a little table here to show you, sort of condense it, what you need to put in, the questions you need to answer. And most people know these off the top of their head is, how many units of each crop are you producing? And to make this simple, I just came up with 5 typical crops that you would see in a typical greenhouse. 3 different kinds of bedding plant flats, geraniums in 4-inch pots, and poinsettias in 6-inch pots. And the number of units that we start, and then how much space on the bench is each one of these taking. So a flat takes about 1.64 square feet, and a poinsettia is pretty much on a square foot center, and the geraniums 0.11. And then how many weeks are they there? And make sure you account for if they're produced and they're sitting there but they haven't been sold, that space has to be accounted for as well. So we look at the petunia flats are on the bench 8 weeks, and the poinsettias are 15 weeks. And then every greenhouse I go in, I say, how much do you sell? Because most people don't pre-sell their product. They grow it and then they sell it. And they always say, I sell everything, but there'll be a big compost pile in the back. So we've got to account for those too, because you're buying a pot, you're buying the soil, you're buying the plants, you're watering it, you're fertilizing it, you're harvesting it. And then if it doesn't sell, something needs to account for that. So we look at the percentage sold. So I put around 98, 95% for everything. And then the price that we sell it for. Now, if you find that you have multiple markets and some poinsettias maybe only go for $5 and others go for $7, you can just split those into 2 different crops. So that's an easy way to deal with that.
So Robin, you've got a lot of examples. I mean, we're dealing with a greenhouse example, but for other people that are on our session that maybe aren't running a greenhouse, or maybe running field crops, or maybe they're growing exclusively outside, or they have livestock, you've got this. This is a little bit different area, and I think for some people might be like, whoa, I don't account for the square footage in my barn, for instance, and maybe are thinking, is that really necessary for me to do that? So as you think across to different types of enterprises, is it necessary for people to get down in the detail? And for instance, in greenhouse world, why do you get down to this level of greenhouse? Kind of the cost per square foot. So I guess there's a couple different questions there for you, but I know that we've got some people that aren't greenhouse folks on here, and they may be getting a little intimidated by these examples. So just wondering if we can pull in, how they might apply it themselves.
Yeah, I mean, if space isn't important, you can just, I guess, just assume that everything is used. But as we were going over, remember, because greenhouses are so capital intensive, that's why we get down to the nitty gritty of cost per square foot per week, because a greenhouse, a top of the line brand new greenhouse is super expensive, almost like a plant factory. So if you don't account for every square foot, you're probably not going to be making money in this day and age. Now you can go to a simple hoop house getting started and produce a really good crop in most parts of the country. And I would think that for most products that you would be producing in a greenhouse, you don't need a super fancy glass greenhouse. You could do a double layer poly, which actually Bill Roberts at Rutgers invented those, and that's made it much more profitable for people to produce greenhouse crops. But because it's become such a competitive market, if we don't account for every square foot and make the most of it, we're not going to make money. As you saw when you were doing those calculations, the operating expense ratio, we're putting in a lot of money to get $1 out of each product.
And perhaps as we look at livestock producers, or even outside crop producers who are spending a lot of money, capital investment in land, capital investment in barns, maybe it's not such a bad idea to take a sheet out of the greenhouse notebook and do some evaluation, a little bit deeper dive like you're doing here. Yeah,
I think so. I mean, I have not looked at, mostly when I get dairy people contacting me, and it hasn't even been many lately, they're pretty much in a, sea of red ink, and they want me to figure out how to save them. And it's pretty tough at that time. But I remember way back in college when I was taking livestock production, those silos that everybody used to have, I still see them around. I don't know if people are using it, but that's a big expense too. So there's a lot of expensive capital that goes into other types of livestock operations. And a lot of people that are taking Annie's project are also new farmers. And there are ways of doing things, more cost effectively. You can do high tunnels and things. So I don't want to intimidate people and think you can't get in the business. But we do want to account for all of our costs, no matter what they are, in one way or another. And again, I go back to the KISS principle. If this is more complicated than what you need for your farm, then scale it back and just put it in the outdoor cost of production. You'll see when you go through that, it's a little less complicated than the greenhouse one. Have I answered the question, or hopefully?
Yes, ma'am. Thank you.
Okay. So, and some of the bigger category, things to look at are, did you sell everything? Because you got to account for things you produce and don't sell. It still costs you money to get, to produce that. And the price. So these are the variable costs that we're trying to, variable or direct costs that we're trying to allocate to each of these different types of plants that we're growing in the greenhouse. And again, you could think of these as different types of crops that you have. And you may not know the labor for each. You may have to just leave this on a square foot per week basis. But if you do some time and motion studies and calculate how long does it take to pot up a flat of petunias and measure that a couple times, it doesn't change that much. So I'm finding more and more producers are doing this. Then we usually know what the seed cost or the cuttings to go into producing each unit, the container, the growing media. And I should have put a picture in there. Those nurseries that I saw last week, they're shipping in media from somewhere in Eastern Europe because it's cheaper than getting it from Canada, which is where people were getting peat before. So you're constantly looking, for cheaper inputs around the world and things that work for you. Now, most greenhouse producers are selling, a lot of them, the bigger ones, are selling through what we call the big box stores like Lowe's and Home Depot, and used to be Kmart, now Walmart type stores. They're all on what we call pay by scan. So you've got to put a barcode with information on there. So you're going to have some kind of a tag that goes through the system. And also what growers are telling me, if they're selling to Lowe's or Home Depot, since it is what they call pay by scan, they don't get paid until it goes through the cash register. They pay a person to go to that store and water the plants. Otherwise, they're not going to have anything left to sell. So it's like you have your own little retail farm market right inside of the big box stores. So we put all this information in, and it helps you compare across crops. And you ask, why do we care about cost per square foot? Well, that's kind of the only fair way to compare one thing to another because they take up different amounts of space. So I've highlighted each of these categories, which one seems to be the winner on each type of thing. If you look at the adjusted cost per unit, once we take into account the percentage that we don't sell and the empty space in the greenhouse, the cheapest product of these 5 to produce are geraniums in 4-inch pots. If we look at, well, where are we getting the most money? Poinsettias are the biggest sales per crop. Because remember, I said we have this greenhouse that we have full of bedding plants in the spring, and then we think, what do I do with it the rest of the year? So we fill it up with poinsettias. So that's the main crop we have in the fall. So that's the biggest sales, over $650,000. If we look at total cost per crop, again, the cheapest crop to produce are these geraniums in 4-inch pots. But of course, a 4-inch pot is smaller than a 6-inch poinsettia, and it's a lot smaller than a bedding plant flat. So that makes sense. But if you look at the profit or loss per crop in this particular example, because we have our poinsettias priced high enough to make it work, they are making the most profit per crop. But if we look at the profit per unit, the petunias are making $1.29 for each petunia flat. So you see it kind of changes depending on which category we look at, is which crop do we think would be our winner. But the only real comparison to compare apples to apples is per square foot per week. That's how we equalize everything. And there, the geraniums and 4-inch pots are the clear winner. We're making 28 cents per square foot per week. Nothing, the closest second is petunias at 10 cents per square foot a week. So we're almost triple the profit in geraniums. And if we weren't calculating this on a per square foot per week basis, we probably wouldn't notice that. So if I were this greenhouse owner, I would see if I could figure out how can I sell more geraniums in 4-inch pots, because that's my big winner as far as looking at cost per square foot per week. So right now, we're seeing fuel prices go up, and a few years ago, they had gone through the roof as well. So what happens if we keep everything the same, but we go back and we just triple our fuel prices? And that's I think one of the big values of having a cost accounting program like this, or making your own, is tailor it to you and then go in and say what happens. So in that case, all of a sudden, those geraniums, which you thought were profitable, now are losing money. We're losing $32,000 per year on geraniums, and we're losing even more than that on the poinsettias. So what do we do in that situation? Well, what if we could increase our prices by just 5% across the board? We're still losing money in those two crops, but we're only losing 3 cents per square foot per week on those two crops, and we're making money on the others. So we might want to, again, do some more cost adjustments if we can. People are buying in pre-finished crops from other people. If, we're finding more and more of this specializing and trading. If somebody else can produce poinsettias cheaper, maybe I should buy it from them and just resell them to keep my customers happy. So this is really just showing you that this can be a planning tool to see how things change. Oops. Yeah, so that was if you increase, I think I labeled that wrong. That was the fuel increase. And then if you increase the price by 5%, you're still not 100% in the black, but you're getting closer. Now, remember that I said, everybody says they sell everything, but what happens if you had the price of fuel go up or triple, which it may very well do? You could increase your price by 5%, which isn't a lot, but you only sell now 80% of your crop. Well, look, we've got a sea of red. Everything is losing money. So this again emphasizes making sure that you utilize that space efficiently and that you don't produce things that you can't sell, because you've sunk a lot of labor and material cost into that. And remember, materials cost are about 1/3 of our cost. So also, when we put the information in the balance sheet, we can look at the gross profit margin, return on equity, and return on assets. And you see everything gets a lot worse when the fuel price triples. We started out with good numbers. We triple our fuel price. They go really bad, but that shrink, believe it or not, has even a bigger impact on putting us in a very bad financial position. I think we're getting tight on time, so I'll move over to outdoor production. And you can see this is a little bit simpler. Here we just ask for how many units of flower stems are we starting, or whatever you're, change this to something else. You can actually just, it's not even designed with flowers in there. It lets you put in what you're growing on a per acre basis. The number of units, whatever that is, how many acres, how many weeks they're in the ground, what percentage are sold, and the price then per bunch of flowers in this case. So then it will calculate for you the sales, the profit per crop, the profit per unit, which in this case was a bunch of flowers, and profit or loss per square foot, and price. But we could just ignore the square foot part if that's not applicable to you in outdoor production. but it allows you to tease that income statement into 2 different categories, and you could do it even further. So this is just quickly going over what's in a balance sheet and how those ratios come into play, where basically a balance sheet has to balance, and it's just dividing all the assets in your business into who has claims on them. The liabilities are claims of outsiders, and the net worth is claims of the owners. And I tend to make it simple and do it current and non-current. Current are things that are cash or will be turned into cash within a year. Non-current are things that last longer than 1 year. So those current assets are things like cash, accounts receivable, and prepaid expenses. And non-current would be your vehicles, your greenhouse structure itself, equipment, securities, buildings, and land. And so this is how it looks on the balance sheet for the Rutgers cost accounting program. And we do a beginning and end of year. And if you don't have both, just you can put everything in the year end category. So we already, so liabilities are the same thing. Current liabilities are things that are going to be payable within the next year, like notes payable, accounts payable, rent, taxes, and interest. And the non-current are things that you're going to have to pay that are due further into the future. So loans, mortgages on land, and mortgages on the buildings. So that you just basically put your balance sheet into the program. And again, in this example, we didn't have a beginning one. We just put the year end. And the net worth is $758,000 roughly. So that allows us then to go back to that page with the ratios, and we divide it into the different categories. So we have the profitability ratios, which shows your ability to earn a good profit and generate a satisfactory return on investment. We can calculate the profit just in dollar amounts, the gross margin, the profit margin, which we said was a little less than 10%, return on equity, so returns to how much your money is in the business, and return on the total assets of the business. And profitability, I think, is one of the best measures to look at the progress of your business from year to year. And most people in the greenhouse business, I find, know the profitability, but they, again, don't know the profits of individual crops, which is what I've just gone over with you. So again, it's the bottom line of your revenue minus expenses. So if we look at some of those profit margins, again, with the price of fuel tripled, everything goes red. But if we can increase the price of all of our products by just 5%, we're not making the 200,000 we were before, but at least we're not losing. We're making 73,000. Our profit margin is not as much as it was before, but it's not in the red. It's 3.2, and return on equity and return on assets are down, but they're not negative if we don't make some reaction to the fuel price going up. So especially with everything sort of in flux now, I think something like this cost accounting program can help you do some planning and what if this happens and so forth. So there's also the other ratios, the financial efficiency ratios, how well you employ the assets you have. And we have a lot of assets in a greenhouse business, and I think in many other farm operations too. And, you know, a barn isn't cheap to build as well. And livestock are expensive. And if you have a fruit farm, you've got a lot of long-term assets sitting in the ground there. So you do have other things invested in the business, and you want to look at how efficient this is. Liquidity is the ability of your firm to meet its current obligations without disrupting normal business operations. So again, I've given you like the current ratio, that's the current assets over current liability. And the example we had is 1.85. we're recommending that it be over 1.5. So we're doing okay in this example. That's basically the average greenhouse in New Jersey. And it measures the ability to satisfy your current debts with current assets. And solvency, can you meet your loan payments? So there's various measures here. And again, the program calculates it for you. We look at what the recommendations are. We have a little bit more debt than is recommended. But this is, when you're investing in a greenhouse, it's an expensive facility. And I know Farm Credit has programs now where people are actually renting the greenhouse rather than owning it. So that may be something to take a look at as well. So the final thing that we've added to the cost accounting program is a cash flow statement, because I think with all farm businesses, except for maybe a CSA, you're spending a lot of money on expenses, and then you sell the enterprise, the product, and then you wait to collect the money. So you need to know which months you're going to need to have an operating loan to get you through. So during the winter months, for the most part, we're spending in a greenhouse. We're cranking up the heat, we're potting up the plants, but we haven't sold them yet. So January through April, we've got a lot of negatives down here at the bottom. And then in May, we start selling and pretty much have a positive cash flow the rest of the year. So this will, if you take the information coming from your income statement here and start spreading it out over, okay, which months am I going to have this happen? The winter is usually a good time for planning. I think the greenhouse is probably already cranked up and busy right now, but for other farm enterprises, this is the time of year, I think, that you can start doing some number crunching and planning and looking at what ifs for the season. So the main part of the greenhouse cost accounting program is the cost accounting, and it lets you do some benchmark analysis, and it lets you do some what if on paper instead of making those mistakes in the real world. I think I gave the example the other day of a real live greenhouse guy that I was working with when I was in graduate school. He was concerned that, I have this expensive greenhouse, I have high overhead costs, I want to get more poinsettias in this greenhouse than possible. So instead of leaving his poinsettias on a 1 square foot per plant basis, he's put them pot to pot. So now he's got 4 poinsettias per square foot. All of a sudden he had 3 foot tall poinsettias instead of, a foot tall poinsettias, and nobody wanted them. So you do want to reduce your costs, but you also have to think about the consequences. And so hopefully doing some of these things on paper or in a spreadsheet will save you some expensive mistakes in the real world. And you can also do some projections for the future. And then sit back and analyze what happened last year. Take this spreadsheet, put your numbers in it, see which crops were making money, which ones were losing money, and what you can do for next year. Is it time to increase the price? Will your market accept that, and so forth? So here is my contact information. A lot of this information is on the Rutgers Farm Management website. We're actually in the process of moving it to another website, but for now, this is where everything is. And hopefully there will be a direction to take you to the new one once it's up and going. So I think I have about 5 minutes for questions, if anybody has any.
Any questions out there? Now's your time. You've got the expert here in front of us. You brought up the example of the poinsettias and them growing too tall. I mean, we've run into the same sort of situation when we overstock livestock buildings, or we overstock pastures, or, we're trying to push too much into any kind of ag production. You have to think about that. Sometimes we don't realize the ramifications of our wanting to put more throughput, because the biological system can only handle so much, right? It's not like a factory.
Right. Yeah, we have that overhead and we want to spread it, but yeah, I actually live on a little small hobby horse farm, and I was just at a presentation last night, and the county agent said, you know what, you shouldn't have more than you need for every horse. You need 2 acres, and if you start having more than that, they're going to wreck the pasture, and you're not going to have enough food for them, and then you're going to have to start buying hay. So it's the same principle of, you know, trying to cram too many animals in a small amount of space is like trying to cram too many plants in a greenhouse. You want to be efficient, but you need that sweet spot of not where it's starting to impact the quality negatively, so that also impacts the price that you can get, or whether you can sell it at all, or ruining your asset in case of your pasture. You know?
Yep. Or just decreasing productivity of the plant or animal. Like you said, maybe you can't sell it, or maybe you have reduced production at the end because you've tried to overstretch things. So, and then of course that would impact your bottom line. So you could play around with your spreadsheet doing that as well, showing what would happen, for instance, if you overstocked your barn and your animals lost productivity, then how would that impact your bottom line as well? So that could be a very interesting exercise for us as well, and using your spreadsheet.
If you cram, you know, like vegetable plants, if you plant those too tight, then you're going to have insect and disease pressure come in, probably reducing your weeds, but you know,
there's always something, right?
Always something. It's always something.
Always something.
I know I was working with peaches several years ago when we were trying to do these biological controls. And then the problem with that is when you just do these spray and pray, as we used to call it, and you kill everything, and now you do biological controls, all these secondary insects that weren't a problem before now are a problem, because now we're not treating those. So there's always every action has an equal and opposite reaction. Isn't that what we learned in chemistry class? It's the same thing in economics, I think. You have to look at all the consequences. And I think, again, just going back to the spreadsheet, if something happens, then go back. You can use this as a planning tool to analyze that mistake and, well, what can I do to correct it for next year?
Right. Well, we hope that you've enjoyed the webinar. Thank you, Robin, for your contributions today. If you want to get in touch with Robin, again, you can see her information at the bottom of the slide. We have been recording this session, and we will be making the link available, and eventually it will be going up just on YouTube as well, so people can generally access it. But we do thank you for your kind attention today, and we look forward to seeing you next week. We have a session on pricing, so don't miss that. And the last session for the month will be on benchmarking and financial analysis. So please join us for those sessions, and we look forward to seeing you soon. And we appreciate you participating in our Annie's Project programming.